Everybody is talking about what the Federal Reserve said. Very few people are talking about what silver did. And that difference might end up being far more important than the actual headlines. Because when an asset receives news that should hurt it and refuses to collapse, experienced investors pay attention. Over the last few days, financial media has focused almost entirely on interest rates, policy statements, inflation concerns, and what the Fed may or may not do next. That's understandable. The Federal Reserve influences virtually every financial market on the planet. Stocks react, bonds react, currencies react, commodities react, and silver is no exception. But there is a mistake many investors make during major Fed events. They become so focused on the news itself that they stop paying attention to the market's response. The response is often more important. Think about it. If everyone already expects something to happen, then the event itself becomes less important than how investors react afterward. That is exactly where silver finds itself right now. For months, investors have been preparing for a higher for longer interest rate environment. For months, analysts have debated whether rate cuts would be delayed. For months, markets have tried to figure out how restrictive monetary policy might remain. None of these discussions are new. They have been happening continuously, and yet despite all of that uncertainty, silver continues attracting attention from investors around the world. Why? Because silver's story is much larger than central bank policy. In fact, one of the biggest mistakes people make is viewing silver only through the lens of interest rates. Yes, rates matter. Yes, inflation matters. Yes, monetary policy matters. But silver has another side that many people underestimate. It is one of the most important industrial metals in the modern economy. That means silver benefits from trends that have absolutely nothing to do with central banking. Artificial intelligence, solar energy, electric vehicles, data centers, advanced electronics, medical technology, telecommunications, defense systems. All of these sectors require silver in one form or another. And many of these industries continue growing regardless of whether rates are cut next month or next year. That creates an interesting dynamic. When investors buy gold, they are often focused primarily on monetary factors. When investors buy silver, they are buying exposure to both monetary demand and industrial demand. That combination makes silver unique, and it helps explain why silver often behaves differently than people expect. There have been multiple moments this year when analysts predicted significant weakness. Some forecasts looked reasonable, some concerns were legitimate. Yet silver repeatedly found buyers willing to step in. That doesn't mean the market is invincible. Every market experiences corrections. Every bull market experiences volatility. Every trend experiences setbacks. But there is a major difference between a market that experiences temporary weakness and a market that completely loses its underlying support. Those are two different things. And right now, many investors are trying to determine which category silver belongs to. That is the real question. Not whether silver can move down for a few days. Not whether volatility can increase. Not whether traders can become nervous. The real question is whether the larger foundation underneath silver remains intact. And when you examine the major drivers of demand, there is a strong argument that the foundation remains very much alive. Let's start with technology. The artificial intelligence boom is not slowing down. Every major technology company continues investing billions into infrastructure. Massive data centers are being built around the world. Advanced processors require sophisticated manufacturing. Power systems continue expanding. Network infrastructure continues growing. All of this requires materials, and silver remains one of the most important materials in advanced electronics. Now, add energy. Governments and corporations continue investing heavily in renewable energy projects. Solar installations remain one of the largest sources of industrial silver demand. Whether someone agrees with those policies or not is irrelevant from an investment perspective. The reality is that projects continue being developed, panels continue being manufactured, silver continues being consumed. Now add transportation. Electric vehicles require significantly more silver than traditional vehicles. As adoption grows over time, demand for industrial metals remains an important variable. Again, none of this guarantees immediate price increases, but it does create long-term demand that investors cannot ignore. And this is where the silver story becomes particularly interesting. Because while headlines focus on short-term events, industrial demand operates on a much longer timeline. A company building a billion-dollar facility is not making decisions based on tomorrow's Fed statement. A manufacturer planning production years into the future is not changing everything because of one press conference. These trends move slowly, but they can have enormous effects over time. That is why experienced investors try to separate noise from signal. Noise changes every day. Signal develops over months and years. And right now, there is a growing debate about whether silver's long-term signal is becoming stronger than its short-term noise. The answer to that question could determine where this market goes over the coming months. Because if industrial demand continues expanding while investor demand remains stable, the supply-demand equation becomes increasingly important. And once markets begin focusing on supply-demand dynamics, price behavior can change very quickly. That's why so many professional investors continue monitoring silver despite all the volatility. They understand that some of the most powerful trends begin quietly, long before they become obvious to everyone else. And right now, there are signs that the silver market may be entering one of those periods where the underlying story matters far more than the daily headlines. The next few weeks could reveal whether that theory is correct. And what happens next may surprise a lot of people. Now here's where the silver story becomes even more interesting. Most investors spend their time watching headlines. Professional investors often spend their time watching flows, because headlines tell you what people are saying. Flows tell you what people are doing. And in markets, actions usually matter more than opinions. That is why so many serious silver investors continue paying close attention to physical demand, not because physical demand guarantees higher prices tomorrow, but because physical demand reveals something about the underlying health of the market. Think about the difference between a trader and a long-term buyer. A trader may enter and exit a position within hours. A long-term buyer may intend to hold for years. Those two participants influence markets in very different ways. When a trader buys, that demand can disappear quickly. When a long-term buyer acquires physical metal, that supply often leaves the active market for extended periods. That distinction matters. And it becomes especially important during periods of uncertainty. Over the last several years, one of the biggest debates in the silver market has centered around physical demand versus paper trading activity. Some investors focus almost entirely on futures contracts and short-term price action. Others focus on inventories, deliveries, and long-term supply trends. Both perspectives matter, but they tell different stories. The futures market can influence prices rapidly. Physical demand often influences trends gradually. The challenge for investors is understanding when one story becomes more important than the other. And right now, there are signs that physical market conditions remain a major part of the conversation. Why? Because silver is consumed. Unlike many financial assets, silver has real-world applications that remove material from available supply. Every year, millions of ounces are used in industrial processes, electronics, solar technology, medical equipment, electrical systems, advanced manufacturing. Once silver enters many of these applications, it doesn't simply return to the market immediately. That means supply and demand remain critical variables. Now let's take a step back and think about what creates major price moves in any market. Price rises when demand grows faster than supply. Price falls when supply grows faster than demand. It sounds simple, but the implications are enormous. Because if demand remains resilient while supply growth struggles to keep pace, pressure can gradually build beneath the surface. At first, nobody notices. Then a few analysts start discussing it. Then institutional investors begin paying attention. Eventually, the broader market catches on. By that point, the move is often already underway. That is why smart investors constantly look for developing trends before they become mainstream narratives. And silver has several trends worth watching. The first is industrial consumption. As technology becomes more advanced, material requirements often increase. Modern electronics depend on conductivity, reliability, and efficiency. Silver excels in those areas. That makes it difficult to replace completely in many applications. The second trend is infrastructure investment. Around the world, governments and corporations continue investing in energy systems, manufacturing facilities, and technological development. These projects require enormous quantities of materials. Silver remains one of those materials. The third trend is investor awareness. For years, silver lived in the shadow of gold. When people thought about precious metals, gold received most of the attention. That is beginning to change. More investors are starting to understand silver's dual role as both a monetary asset and an industrial metal. That doesn't mean everyone suddenly becomes bullish, but it does mean awareness is increasing. And increased awareness can eventually influence capital flows. Now let's talk about something that creates confusion for many investors: volatility. Silver is famous for volatility. Anyone who has owned silver for a meaningful period of time understands this reality. The market can move sharply, sometimes unexpectedly, sometimes aggressively, and often when investors least expect it. This volatility causes many people to make emotional decisions. They become excited near highs, they become fearful near lows, they chase momentum, they panic during pullbacks, and in doing so, they often end up working against their own interests. The most successful investors usually develop the ability to remain objective, not emotionless, objective. They understand that volatility is part of the process, especially in a market like silver. When prices move lower, they ask why. When prices move higher, they ask why. They focus on evidence instead of emotion. That mindset becomes extremely valuable during periods like the one we're experiencing now, because there is no shortage of opinions. Some analysts believe silver is preparing for another major advance. Others believe tighter financial conditions will create pressure. Some focus on industrial demand. Others focus on monetary policy. The truth is that markets are influenced by all of these factors simultaneously. That is why simplistic narratives often fail. The market is rarely as simple as one headline suggests. And silver is one of the best examples of that complexity. A single economic report will not determine its future. A single speech will not determine its future. A single news event will not determine its future. The market is responding to dozens of forces at the same time. Interest rates, inflation, industrial growth, investor sentiment, currency movements, supply trends, global economic activity, geopolitical developments. All of these variables interact continuously. That is why silver often surprises people. The market is larger than any single narrative, and right now there is a growing possibility that investors may be underestimating how important physical demand remains. Not because physical demand guarantees a shortage, not because it guarantees a squeeze, but because it provides a foundation that many markets simply do not possess. Foundations matter, especially during uncertain periods. When confidence disappears, weak markets collapse. Strong markets bend. There is a difference, and over the last several months, silver has shown signs of resilience despite significant challenges. That resilience doesn't guarantee future gains, but it does deserve attention, because resilient markets often reveal valuable information about underlying demand. The question investors should be asking isn't whether volatility will continue. Volatility is almost certain to continue. The better question is this: what happens if physical demand remains strong while investor interest gradually returns? That combination has historically created some very powerful moves in the silver market. And if that scenario begins developing again, many people may find themselves reevaluating silver much sooner than they expected. Which brings us to the next and perhaps most important question of all. If silver's long-term foundation remains intact, so what could actually trigger the next major move in silver? That is the question every investor is trying to answer, because once you move beyond the daily headlines, beyond the Federal Reserve discussions, and beyond the endless stream of market commentary, you eventually arrive at the only thing that truly matters. What changes investor behavior? Markets move when expectations change, not when news happens, not when analysts make forecasts, not when social media becomes excited. Markets move when reality forces investors to rethink what they believe. And right now, there are several developments that could force exactly that kind of reevaluation. The first is confidence. Most people underestimate how important confidence is in financial markets. When investors feel uncertain, they become defensive. They hold cash. They reduce risk. They wait for clarity. But once confidence starts returning, money begins moving again. Capital seeks opportunity. Investors start looking beyond immediate risks, and that shift can create powerful momentum. Silver has historically benefited when investors begin looking ahead rather than focusing exclusively on current uncertainty. Why? Because silver often performs best when markets start pricing in future possibilities instead of present fears. That doesn't mean fear disappears, it never does. But the balance changes, the focus shifts, and when that happens, assets that have spent months consolidating can suddenly come back into focus. The second potential catalyst is the growing realization that silver is not simply a precious metal story. For years, investors have tended to place silver into the same category as gold. There is certainly overlap. Both metals have monetary characteristics. Both can act as stores of value. Both attract investors during periods of uncertainty. But silver also has an industrial identity that gold simply does not possess to the same extent. That distinction matters, because it means silver has multiple paths to demand. If economic activity strengthens, industrial demand can help. If investors seek hard assets, monetary demand can help. If both occur simultaneously, the effects can become even more significant. That is one reason silver has historically experienced some of the most explosive moves in the commodity space. It has the ability to attract different groups of buyers for different reasons, and when those groups begin moving in the same direction, momentum can accelerate very quickly. The third catalyst is something that many investors overlook entirely: positioning. Markets often move not because of what people are buying, but because of what people are forced to buy. There is an important difference. When investors are underexposed to an asset and that asset begins outperforming expectations, pressure builds. Fund managers start paying attention. Analysts revise forecasts. Investors who ignored the market begin reconsidering their assumptions, slowly at first, then all at once. This process has occurred repeatedly throughout financial history. An asset remains ignored. Then it starts outperforming. Then people explain why. Then more people notice. Then capital begins flowing. Eventually the narrative changes. And by the time the narrative changes, much of the move has already occurred. Could silver experience a similar process? Possibly. No one knows for certain, but it is a scenario worth considering, especially if the market continues demonstrating resilience during periods that should theoretically be difficult. That resilience may ultimately become one of the most important stories of the entire year. Because resilient markets tend to attract attention, and attention eventually attracts capital. Now let's talk about risk, because every serious investor understands that opportunities and risks always exist together. There are still risks facing silver. Economic growth could slow, industrial demand could weaken, financial conditions could remain restrictive longer than expected, investor sentiment could deteriorate, short-term volatility could increase dramatically. All of those risks are real. Anyone telling you otherwise is not giving you an honest assessment. Markets are uncertain by nature. There are no guarantees. There are only probabilities. The goal is not to predict the future with perfect accuracy. The goal is to identify situations where risk and reward appear favorable. That is why disciplined investors focus on evidence. They avoid becoming emotionally attached to forecasts. They remain flexible. They adapt when conditions change. And perhaps most importantly, they understand that being early and being wrong can sometimes look very similar in the short term. Patience matters, especially in markets like silver. Many investors spend months waiting for confirmation. Then they spend years wishing they had paid attention earlier. That pattern repeats again and again. The market tests conviction. The market creates doubt. The market rewards patience. And the market punishes emotional decision-making. Right now, silver sits at a fascinating point. Not because anyone knows exactly where prices will be next week, not because a single event guarantees a breakout, but because several important forces continue moving beneath the surface at the same time. Industrial demand remains relevant, investor interest remains alive, technology trends remain supportive, global infrastructure spending remains significant. And despite numerous challenges throughout the year, silver continues refusing to disappear from the conversation. That alone should tell you something. Weak markets fade away. Strong markets continue attracting attention. The strongest markets often spend long periods building foundations before making their biggest moves. That is why experienced investors spend so much time studying behavior instead of predictions. Behavior reveals conviction. Behavior reveals demand. Behavior reveals whether buyers are truly committed. And when you look at silver through that lens, one fact stands out. The market has faced uncertainty. The market has faced volatility. The market has faced skepticism. Yet interest remains. Demand remains. Attention remains. The story remains. And that means the next chapter has not been written yet. As investors, that is exactly what we should be watching. Not the noise, not the panic, not the excitement, the underlying reality. Because ultimately, markets reward those who focus on what matters most. And right now, the most important question is not whether silver can experience another volatile week. The most important question is whether the long-term forces supporting silver today will be stronger 6 months from now than they are today. If the answer is yes, then the current period may eventually be remembered very differently than most people expect. That is why the smartest investors are not asking whether silver survived the latest headline. They are asking what happens if the underlying trends continue strengthening while the broader market is still focused on short-term noise, and if that happens, the next major move in silver may arrive much faster than most people are prepared for. If you enjoyed this analysis, make sure to subscribe to AgJohn Silver Update because over the coming days, we'll continue tracking the physical market, investor sentiment, and the key developments that could shape silver's next big move. Let me know in the comments. Do you believe silver's biggest move of 2026 is still ahead, or has the market already shown us its best rally? I read every comment, and I'll see you in the next update.